Traders all over the world are already using switch markets. Thousands of traders just like you across multiple markets each and every day. If you haven't joined yet, you can open an account and begin trading in just a few minutes. Click the link in the description.
What am I doing? I told myself this year was going to be different. So many things I want to achieve, yet I'm here wasting my time doom scrolling. I was going to start running again. I was going to make more of an effort with my friends. I was going to work on my confidence. I was going to get fit again. I was going to start trading. Time to wake up and stop making excuses. Okay, switch markets. Let's do this. When you're ready to trade, Switch Markets is waiting for you.
By the way, you're not trading alone. There's a whole community of traders tuning in daily, sharing ideas, watching the markets together, right here on the Switch Markets YouTube channel. If you want to be a part of it, subscribe and tune in daily. I'm here to answer your questions live.
Time moves in a constant rhythm. Every second counts. Every decision carries weight. In trading, the cycle never stops. Opportunities appear, they disappear, sometimes before I'm ready. Even when I step away, the market keeps moving. What if I'm wrong? What if I miss? What if this one turns against me? Every chart I've ever studied, every level I've marked, every rule I've committed to, all of it comes down to one moment. Executed with clarity, without hesitation. Because control is choice. And in that moment, control becomes edge. Switch markets. Trade with discipline.
If you're already trading, why settle for average? Switch Markets is raising the bar. Tools, resources, dedicated live support. It's time to make the switch to Switch Markets. A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is CPI Live. Today, we're going to cover the latest installation of the United States Consumer Price Index, and it doesn't really look that great, that rosy going in. We're going to give you exactly what to look for as the number drops. We've got key levels for the US 30, the US dollar. It is really starting to gain a little bit of puff back to that 100 level in the DXY. So I'm watching closely. The Iran war looks like it's hot again. We talked about that. I think that prediction was spot on. We made yesterday saying that we're probably going to go hot, and we're hot again. So we're right back in that situation. U.S. equities taking a hit right now ahead of the market open. U.S. oil back up to right around 90. U.K. oil back 92.89. So really interesting stuff. We had questions about gold. I'll cover gold in just a second. Fascinating level that's in play right now. I've got a 13-month EMA in play for gold. And let's start off with a 920 EMA trade. I don't advise doing this. I think it's a very high-risk maneuver, but if you're interested in taking a position ahead of the CPI report, I mean, this is about as risky as it gets. But right here, you've got a 30-minute Euro US dollar sell set up on that 920 EMA crossover. The 9 crossed under the 20, and that gives us our coded signal, and we have the ability to take a short. The only way you can justify taking a high-risk maneuver like this is having a solid out, and we've got a solid out right up above that swing high, right around 115.61. So essentially, the play is shorting somewhere right around that 115.38ish, looking for about 115.07, better than a 1-to-1 risk versus reward. But I have to tell you that this type of trading very rarely works out well. We'll see exactly what happens though as this CPI number drops in about 7 minutes. So good to see everybody out there in YouTube land. Let me see Mookit. Good to see you. What's the direction on gold? Let's go ahead and cover gold. Atham. Yo, Shane. Hi, everyone. Good to see you. Let me see something on gold. Say something on gold. All right. Give something on gold. All right. I'll give you a little bit of something on gold. That's for sure. Tuka, good to see you over in the How to Trade community. All right. Let's get over to the gold market. Gold, fantastic trade we had. My 13-month EMA held up very, very well for a beautiful scalp. It was right around 4,186, as you can see right here on our 30-minute chart. Pretty good stuff, guys. Pretty good stuff. We came right down, hit it beautifully during that, I would call that the Asia session, that early Tokyo session, and that low right there is about 41.87, just a beautiful trade. Nice little bounce up to 42.07. Believe it or not, you can make a living tick scalping key levels like that. You really can. That was a good one. 13-month EMA, stepped up, bought it, cashed, moved on to the next one. That trade's over now. Let's back to our monthly technicals. What do we have? Well, we've got a 50% level that's coming into play right around 4,065. To me, that probably would be the next port of call. That would be an area that I would be interested in buying. I don't like 50%. I do not like 50%, but it's a monthly level. Numbers coming off big. We have an opportunity potentially to get something going here. As far as one thing that I did want to cover, and we're going to cover it in a little bit after the number comes out, is our 9 EMA strategy. We're going to make a few of those trades as well. But something like this, right at 50%, 4,065, I'm watching that closely. For right this minute, what would we be looking to do in gold? Long or short? Not interested in really doing much of anything until this number drops with gold. But one thing I could do is I could play the backside of that moving average. This moving average, monthly moving average, beautiful buy. It was a fantastic bid right here. What can we sell it? I'd say, yeah, you can sell it. So I would be looking to step up potentially to the plate here. Take my trade, order, sell, limit, and I'm going to go ahead and sell this thing right beneath my moving average up there. Now, the idea is very simple. What once was support is now resistance. So I'm looking at that moving average, that monthly macro level, as being a potential area where we could step up and take a sell now as opposed to a buy. So I'm going to be watching that one closely as well. We're going to trade the gold on short time frames using one of our strategies. Haven't decided yet, probably the 9 EMA. It's on the move. We want to go short, more than likely, to get in on this 3% sell-off. A lot of action in gold. We'll cover that in just a second. So we got a few things, though, we got to look at news-wise. Definitely, this is your top story, aside from CPI. U.S.-Iran war reignites. Iran response to U.S. strikes. Helicopter went down yesterday after the market closed very late in the U.S. session. It was an Apache helicopter. It went down from essentially Iranian fire, supposedly. Nobody's really saying a whole heck of a lot about the situation other than it looks like it's on again. And this has sort of been the story of the war, on again, off again, on again, off again. We really don't know how this is going to unfold, but it's definitely bringing some serious heat to our U.S. equities indices. And also, this is going to be our big number today, is U.S. CPI. Latest numbers, it was hot in April. We're expecting it to come down a little bit today. Let's go ahead and take a look at our expectations. We'll come back to this U.S. 30. I mean, it's a fantastic level that's in play. I did want to cover it briefly. You can see we had a bit of a bounce from our level. I'm going to cover that later because I just don't see it coming into play for our CPI number. But definitely U.S. CPI and the BOC, Bank of Canada, is going to be active a little bit later today. We'll cover that after the CPI report. How does CPI impact the Forex? If it's low, it's bearish for the USD. If it's high, it's bullish. Why? A low CPI suggests that maybe, just maybe, inflation's in check and all as well, right? And so the U.S. dollar potentially, you could see some potential interest rate cuts. High, if it's bullish, it's going to be bullish for the U.S. dollar. That means a big CPI read, means that inflation's hot. You're going to have to raise interest rates to try to bring monetary policy back into alignment with that two-pronged mandate that the Fed has. Maximum job stability, promote maximum employment and pricing stability. So that's essentially how this is going to read. Honestly, when the number hits the tape, you're going to see markets just go absolutely crazy. So don't get too married to those fundamentals just yet. We'll talk about them afterwards. CPI, though, you can see our expectations month over month. We're looking for this number to come down. Month over month for May, we're looking at it to come down, core CPI, but the yearly figures are supposed to trend just a little bit higher. CPI year over year for May, we're looking for a 4.2% read, which is absolutely dreadful, and most of it has to do with the Iran war and energy prices. And this right here is your raw CPI figure over the last 10 years. It's absolutely brutal, beginning in 2020, back during the COVID pandemic. We'll cover all these fundamentals after the number comes out, and I'll try to put this thing in perspective for you. Okay, now here we go. Let's take a look at a few other numbers. I got some questions on the live chat I'm going to circle back around to in a second. This is a big one right here. This is the dollar yen. Absolutely fantastic pair to be trading during a news event. It's going to be hot. It's going to be moving. This is what you would call a high velocity pair, meaning the volatility is going to be there. So when we look at the key levels for this, right here, we've had a big bullish month, 0.75%. Okay, that's fine. Now we're looking at the yearly high. Yearly high is 160.72. We are right on the doorstep of that, trading right around 160.50 right now. So could we sell 172s? I really believe we could. Now you'll notice that I'm using macro levels to trade on short time frames. Sort of something I've been doing for a lot of years now. So what I want to do is I want to sell this thing. We want to sell right up there, right around that yearly high. So we're going to put a sell limit order in there, and we're going to see exactly how this develops. I'm going to take this down to a 1-minute chart. We've only got a few seconds. We've got 55 seconds before this number comes out. But essentially, this is what we're going to look to do. We're going to scalp. We're going to scalp to the short right in front of 2026's high. Now, a lot of folks out there are going to say, Shane, that is light years away from us. We're never going to get there. We can get there. We can get there very simply, very easily. It really just depends on what this CPI read is. So we've got 30 seconds left before the number drops. Let's go ahead and watch this dollar yen pan out, and then we'll do around the horn, and we'll go into all of our trades as they unfold here in real time. After the release, I'll put it in perspective for you a little bit later. Then we'll get on over to that 9 EMA, start trading that 9 EMA strategy. If you're not familiar, it's a pretty good short-term strategy. 15.10. Let me see. Tina Jin, good to see you, Tina. Let me see. Ugo, ID on the Great Britain pound, Japanese yen. Absolutely. Ebenezer, say something about the Great Britain pound USD. I will. Kelvin, good to see you. Definitely. So we got Great Britain pound USD and the guppy. Okay, here's the big number. We're getting a little bit. Look at that price action. Look at that price action, the dollar yen. Just a violent 1 minute. That's for sure. Let me see. Alan, we might get a strong whipsaw on either side before the main run. Either ways. Alan, you're spot on. That's a veteran observation. It was one that I was going to make in just a minute after this price action sorts out. But I want everybody to see what this does in real time. I really do. I want everybody to see exactly what it is. Let me see. Plakey, good day. Good day, Plakey. Welcome. Okay, so what do we have right here? We have whipsaw action. Now, we're going to get back over that Euro-USD trade, which is in big trouble. That's why you don't trade right ahead of the number. It was a good teachable moment there. No matter what your strategy is, you can really run into trouble doing stuff like this. Very choppy. Very, very, very choppy, right? That is going to be the rule on these big economic releases. You see a chop like this, knocks out all the longs, it knocks out all the shorts. Now we're going to start to develop an idea of where this pair may be going in short order. I want to get back over to US 30. US 30 sort of milling around a little bit, not really much happening, bouncing off of some really brutal lows that developed during the overnight. We almost had a shot to buy in our key level. I'll cover that a little bit later. It's not going to come into play. Euro USD. This is textbook why you don't take these trades ahead of a news event. Nice sell, and then you've got the big rebound. One good thing we've got going for ourselves is we've got a great stop out. Stop out point is right up there. You put your stop, as long as you have a stop loss down that's legitimate, you have a chance to win. And if you have a chance to win, that's all we can really ask. So, bad trade? I don't know if it's a bad trade. We're not dead yet. We're still kicking. We're still breathing. Are we going to get the follow through down to 150.07? I think it's very possible. Like Alan said, and that is a very astute understanding of how the news works. We might get a strong whipsaw on either side before the main run either ways. That's exactly right. Head fakes, pump fakes, fake dumps, fake rallies. It's what it's all about. And when we start talking about something like CPI, something as important as the consumer price index, you're going to definitely run into this all the time. So right here, the one thing that this trade has going for it is we have a damn good stop out point. We know exactly where to get out of this thing. You'll notice that we didn't play it super tight. We put it right up here above this swing high, and now we're looking for the market to find its true form. Is that bearish or is that bullish? Really hard to say. Dollar yen starting to rally just a little bit. So 1 minute chart. 1 minute chart, very choppy inside, and now we're breaking to the top side. Fascinating stuff. All right, gold. Gold, okay, that's a near miss. Now that right there, that will make a lot of your hair fall out. That'll give you deep wrinkles, give you some crow's feet like I've got. But when you take a look at how close we were to making what I call the easy money, and a lot of people in the market are going to tell you there is no such thing as easy money. That's hogwash. When you have a lot of volume and a lot of volatility and a great level to play off of, you've got a chance to win. I don't care what you're trading. And that's exactly what we had. We had a long-term technical level right there. We had a nice spike in volume, volatility, right up very near our entry point. The high right there was 141.73, and we're looking to sell 141 or 41.82s. I mean, we're right there. We really are right there. Take a look at this 30-minute bar. Gold up about 0.5% off of those lows. This would be really a fantastic trade, one that we could definitely dive into and maybe make a little bit of money. Is it coming our way still? I don't know. It's about $12, $11 off, something like that. Let's take this down to a 1 minute chart and see exactly what's happening to gold. Okay, so this is fascinating stuff. Right there is where we wanted this trade. That initial price bar is when we wanted it. You said, Shane, we got to let the market settle down a little bit. I go, when you got a long-term level, a long-term sweet level, one that you really want to get involved with, you take it. You just take it. And that trade right there would have been a very, very quick winner. It didn't come into play, but still we're in the game. Definitely bullish. Nice big bullish break right there. Compression break. And now we're sort of rallying up towards our key level. Euro USD, 115.50. That looks to me like that's going to trend higher. So that suggests that the US dollar is losing a little bit of puff. US dollar, Japanese yen, 160.40. That's nowhere near where we need it to be. It needs to be at 160.72. Maybe later today, maybe. We're going to look at the dollar CAD here in a second. U.S. oil, not really too impacted by CPI. You can see we got a little bit of a move to the bear here, but really nothing that I would be writing home about. The big move was when the war basically kicked off here again about 90 minutes ago. So dollar yen, not much there. Gold definitely has potential. This gold has potential. Do I want to buy or sell right now? I don't want to do anything. I want to sit on my hands and wait for this market to come to me. If it does that, we have a great chance to succeed. All right, we've got some questions out there. Great Britain Pound USD, Great Britain Pound Japanese Yen. Let's do it. Let me see. Plakey watching live from down under. First time watching live. Plakey, great to have you here. We have a lot of friends that are watching down under. Actually, we got a pretty good cross section of folks that watch from around the globe. Always a lot of fun to interact from people from everywhere. Down under, though, we got some really a couple veteran gold traders down in Australia that always weigh in and like to watch some of the streams sometimes. If you have any questions at all, Plakey, be sure to ask. I'm more than happy to answer. This gold sort of a dud right now. I thought we had a chance to really nail it. We're going to go through the questions, and then we're going to get over to the 9 EMA. But first, we actually have to see what the CPI print was. Going through probably, let's see, that first cup of coffee is hitting bottom right now, very early here. It's about 6:30 a.m. in Dillon, Montana, where I'm at. Money never sleeps, though. That's the old saying, right? Money never sleeps. Okay, here we go, CPI. Let's go ahead and give it a refresh and see what exactly the number was. What was it? 0.5% Consumer Price Index for May 2026. There we go. CPI for all items rises. This is the official print. I'll go ahead and drop it in the live chat for you if you guys are interested in reading it for yourselves. Well, I'll learn English too one of these days. I'll drop it over in the How to Trade community as well if you guys want to read the actual release. That is the link. Consumer Price Index May of 2026. The Consumer Price Index for all urban consumers increased 0.5% on a seasonally adjusted basis in May after rising 0.6% in April. Okay, we expected that. We expected it to come down just a little bit month over month. U.S. Bureau of Labor Statistics reported today, over the last 12 months, the all items index increased 4.2% before seasonal adjustment. Ouch. Ouch. Remember inflation, the goal, the target, the optimal target for your Fed, your BOC, your BOJ, your BOE, all of them is 2%. We're running at 4%. We're running at twice of the goal. There's real problems. There's trouble in paradise. We'll take a look at the interest rate expectations here in a minute, but this right here is absolutely, I mean, we could go through and break this down. What I'm looking for is energies. Something like that, 23.5. Gasoline, 40.5. I mean, it's just, you're up 40% year over year. That's absolutely staggering. So that is not necessarily the print we were looking for. I know that the government's not very happy. I know that the Federal Reserve is going to have to potentially raise interest rates to get a handle on this. The real question is how do we trade this moving forward? Well, I mean, honestly, it's a big bearish market driver. We're seeing U.S. equities bounce right now. That may be short-lived, and we'll talk more about that before I sign off. But going into the U.S. Open, I mean, if you're going to trade this going into the U.S. Open, you've got to start thinking whipsaw. You say, okay, we've got a nice bounce going in the stock market, stock futures right now. Will that last? I don't see how. I really don't see how. So you've got, what do you have today? You've got the Iran war kicking off again. That's not good. And you've got a consumer price index read that is really difficult. Let's go back and see exactly what we were expecting, 4.2%. So it came in line with expectations. So that's one way you can sort of sugarcoat this and massage this for the public. But I have to tell you, those expectations are terrible. 4.2% on a yearly adjusted basis. And a lot of people believe in those yearly seasonal numbers. A lot of people love the monthlies. You could come out and say, hey, look, inflation's falling month over month. You could say that, but when you adjust it year over year, it's an absolute disaster, 4.2%. If you would have said in an election year to the Trump administration that CPI is going to be at 4.2% year over year, you'd say you're in big trouble. And I think that's exactly what's happening. All right, so what's the core CPI here? Index for energy rose 3.9 after rising 3.8 in April, 10.9% in March. Energy index accounted for over 60% of all monthly items increase, of course. We also know that. The index for shelter also increased in May. So that's your rents, your home, your mortgages, things like that. Food increased 0.2% month over month. Yeah, food's expensive. The index for all items less food and energy, that's core, rose 0.2% in May. Indexes that increased over the month include communication, airline fares. Airlines ridiculous right now. Medical care, personal care, and recreation. Anything to do with recreation, very, very high. So core went 0.2%. I guess you could say that core CPI sort of kind of performed a little bit better than expected. What does that mean? It means that your numbers without energy are a little bit better than we thought. Well, guess what? Energy is in everything. Core CPI is a fugazi. Don't read. Core CPI will take you down the wrong track every time. Yeah, that's my opinion. All right, so we're still looking at our gold chart. Nothing really shaking here. Euro USD, where it looks to me like we're going to get stopped out potentially anytime. You've got potentially a 30-minute buy setting up, which I probably would rather take. A nice big trade right there. US 30, we've got a key level down here. We'll cover that before we end, but it's not going to come into play. Dollar yen's nowhere near our order. Once just sort of a dead fish. Take a look at this. This is pretty good stuff to look at in the dollar yen if you're interested. I don't know what the heck that is, but something like this. Look at this. Look at that. So there's your bar, there's your price bar, your CPI bar, traded sideways inside of that 1 minute frame. What, for the last 10 minutes, 15 minutes? Everybody's bored? Is everybody bored? All the dollar yen traders are bored? Maybe they are, maybe they aren't. All right, let's go ahead and cover some of these questions here. We had a question for the Guppy. Great Britain pound, Japanese yen, fantastic pair, high velocity pair. This is one of those that moves, and that's why a lot of you trade it. Spread looks like it's about 4 pips right now. I'm not necessarily blown away by that. You can see we've got all sorts of different kinds of trade ideas here. The biggest thing that I really would be looking at now that we pulled up this historical sort of data is look at that. That's a daily chart. Look how many days we've traded inside of the 30th of April. We traded an entire month, almost a month and a half, inside of one trading day, the 30th of April. Fascinating stuff. I mean, clearly there's a breakout brewing. The only question is it to the top or to the downside? When I see a formation like this, I don't like to make things very difficult. I really don't. I can pull out Fibonacci's. I can give you all kinds of levels. The bottom line is, more than likely, you're going to want to sell the top of that range and buy the bottom of it. This is a market that's in complete rotation, right up there, maybe 216. What's the top of that day? 216.60. So I'd probably be interested maybe right around 216.50-ish, somewhere maybe right in here. That could be a fantastic way to do business. Something like that. Maybe just taking a little short, playing rotation. But believe you me, I mean, the market will break. And when it does break, you got to get out. You can't just let this thing ride against you. So this is fascinating stuff to me. Just a flat, dead market, realistically, for the past, 4 weeks, 5 weeks. This buy right here was fantastic. Tested the bottom of that zone. So right now when we're looking at the Guppy, everybody's watching. They all see that top. They all see that bottom. So be ready for some action up there right around, let's see, what is that? 216.60. I'd be looking at maybe 216.50s as a potential scalp to the downside. As far as our macros, I could back up to a monthly chart and look at some macros. I just don't think we really need to. That right there should tell you really all you need to know. It's flat. Is it a bullish pennant? Absolutely. Absolutely. A lot of folks love the bullish pennant. I am one of them. Nice big bull run right there. And then what do you have going? Flat line. Flat trading. Something like that. What does that typically mean? It means there's a breakout coming. 216.50 to the short tentatively. Once we break up above that high, though, we'll look for that price extension. Then we'll look to scale in to the long side. I think it could be absolutely fantastic there. So long story short, Guppy is dead. It's flat, daily chart flat, absolutely moving sideways, and then potentially getting a bullish break here. Not really bearish, but I wouldn't mind playing a scalp up there around that top. I think that's a pretty good way to lock in. Stop yourself out up above that top. That's a very, very, I wouldn't say it's a high-risk trade, but it's one that if you do execute, you've got to be quick on the trigger. What you don't want to do is get swept up in a big run north. And I would be surprised if the BOJ lets that happen. I think we're getting to the point where they're thinking about intervention to prop up the yen. Only time will tell. Realistically, only time will tell. All right, that's the Great Britain pound Japanese yen. We had a question for the Great Britain pound USD. So we're going to go ahead and pull up the cable. So what's the cable doing? Nothing. Monthly chart tells you everything you need to know. Flat line, right? We could draw our monthly levels. We don't have to. We've already hit those. Very tight, though. Very, very tight. So a couple of things I would be looking at right here. Number one, your EMA, 13-month EMA is at 113.44. The monthly low is fascinating to me, 133.02. And then that low right there is 133.06. So 133.02 sort of held up. That 133 zone, 133.09 was a fantastic bid. Now we're trading 134s. So what can we really do? First thing is to identify market state. Market's flat. No question about it. Market's flat. Let's take this down to maybe a 5-minute. Can we get anything done on a shorter time frame? I mean, is it great? Starting to break to the bull a little bit. Could you do something like this? Potentially. You might be able to take a bid right there at 134. It's just really super tight. I don't know. To me, do you want to be holding longs or shorts? If you want to make that decision, you're better off doing something like this. We're going to get knocked out of that Euro USD trade, but that's okay. Our stop loss was where it needed to be. We gave ourselves a chance to win. These trades, you're going to find are very, very low probability, especially if you're holding them ahead of a major economic release like a CPI. CPI's got a mind of its own. It's going to do whatever it wants. So right now, the U.S. dollar is starting to lose a little bit of ground. We'll see if that holds up during the day. Let's go down to the Great Britain pound USD. There's your stop. Great Britain pound USD. What's happening on a 5-minute? Can we get any trades going here on a 5-minute? Okay, we missed it. 5-minute chart, right after your CPI number, there was your Great Britain pound USD bid. The bid was right there, right around 93. Now you're up to 134.05, somewhere in that zone. So you've got a nice little 10 pips. Do you want to be long or short? I mean, you probably want to be long right now, but this market could definitely come back. So be very careful by just diving in and chasing price. You want a level, you want a key level that you can hang your hat on, something like that. And right now the dollar is definitely limping against the majors. Sort of in a no-fly zone, guys. I mean, I really don't know what to tell you with regards to trading this guppy, not guppy, but cable. You had a crossover back here. You potentially could have been holding. Now we're getting the break. Is there anything up there? Let's look at it like a daily or a weekly. Let's look at a daily. Is there anything up there to trade? Not really. You got the 20 EMA. You don't want to trade that in isolation. 5 minutes moving a little bit higher. I just think it's way too tight. I really do. I know that's a bummer. It's not what anybody wants to hear, but I mean, it is tight. Let's go to our daily. This is how I would approach it. This is how I would approach this pair today. 13-day EMA is right there at 134.15, somewhere right in there, potentially an area where you may want to think about taking profits if you're long. Spike high right there to a spike low. Fibonacci's line up really perfect. So expect a robust top side resistance right there at 134.15. Is that what I think the top of the move is today? It's really tough on CPI days. A lot of times these days turn into trend days. And when they turn into trend days, the Fibonacci's typically, they don't matter much. But right there, 134.15, where we got that big moving average, which is sort of in there at 134.15 as well. I think that could definitely be a zone to watch as we roll later in the day. I know I'm speaking in ambiguous terms. Should I short it there or not? With the news out, maybe for a scalp, maybe for 5 to 8 pips, maybe. And with a 2-pip spread, I don't even know if it's worth it. Something to think about there. All right. See you. Good to see you. Good morning. Good morning. Good morning. Good afternoon, wherever you may be. You're welcome. You're welcome, Plakey. Let's see. Can you look at SOXL? Okay. What is it? Soxel? Directions Daily Semiconductor Bull ETF. There it is. I think that's right. If I'm wrong, go ahead and drop me a message in the live chat. Pre-market, what can we really say about it? I guess we're bounced. We bounced way off a big low. What was their earnings or something yesterday? Let me see. Something like this. So we're rallying. So if I was trading Soxel, which is some sort of ETF somewhere, one of the good things about having a technical approach like I have that I've been doing for so long is that I got a pretty good idea how to trade really anything. The big thing you have to watch out for is fundamentals, individual fundamentals that impact these things. Okay, so back-to-back big months. My guess is that they're definitely involved in the war somehow, probably. Something like that. Nice pullback. So you'd want to be a bidder, essentially, from that 191. So pre-market open, we're looking at 195.84s. Is it a buy right now? I mean, you could definitely be looking to buy it if you want. This is the line in the sand for me, 191.15. As long as we're above that, we're still relatively bullish. A better level, of course, is down there at about 133, but we didn't get it. 162, got that. Looks like maybe the worst of this is over for this month. 191, 195, not a bad bid. You'll notice that these highs are all the way up there at 284. This might be the most volatile thing that we've looked at from the stock market in a while. That's just a massive monthly range. Let's go to a daily. Back down to the daily and see what's up. Okay, so right here you can see we tested that and bounced, traded down, bounced, and it looks like our pre-market opens got us about 195, so I'd probably be going long here. For a stock trade, be going long. Probably could stop yourself out potentially beneath this low, which is down here right around 163, but that's a significant risk. So that's how I would see it. As long as you're above that 191, you're probably going to be bullish. It just really depends on where this thing opens and where it goes on the open. But I'd probably be a bidder from 191. Even though you're 196 in the pre-market, I'd probably let that sort out a little bit, maybe the first 5 minutes of the U.S. Open and see exactly what happens. All right. Let me see. Gray and Green Architects. Gray and Green. Good to see. I think it's a temporary move. I think it's all temporary. I think we're going to see the real moves coming probably in about 40 minutes. Very choppy. Not much going on here, in my opinion. U.S. dollar, Japanese yen back down, just sort of rotating around. We didn't get our sell up there, which is unfortunate. Gold, we were very close to getting our sell up there. Didn't get it as well. Now we're sort of pulling back, and what you'll see from gold more than likely is going to be a nice fill-in of your big bar there. Your big bar. There it is. There's your CPI bar trading inside of that. It's not an accident. These ranges set up, and they really get defined over time. You just got to let this thing bleed a little bit. Let it bleed into the U.S. Open, that's for sure. Let me see a theme. Yeah, not much movement from this CPI. I'm interested on your breakdown of those mixed numbers, though. Please go through them when you can. Yeah, we'll take a look at it in a minute. I'll try to put it in perspective, what it all really means with regards to pricing, you know. Let me see. Cook Vice. Good to see you, Cook. I want to go short of the NASDAQ 100. Is it a good move? Well, as always, I'm not a financial advisor. In our market analytics that we put out on the Switch Markets YouTube channel Monday, that video goes out live for the Tuesday London session. I identified a support zone that is a legit support zone down there right around 27,710. That's going to be your 38% retracement. You've also got a weekly 13 EMA, which is big for me, 27,737. That area down there right around 28,000 to 27,500, that would be where I would be looking to bid. So we're not really there yet. If you wanted to go short, I mean, clearly you're probably looking at intraday stuff. You look at your 30-minute chart and say, okay, I want to short this. I don't really know, why would we want to short it? Why would we want to short it? A couple of things really scare me about this market. This is a nice big juicy sell-off that developed back yesterday, right? So there's your big sell-off. We sort of crept back up into the game, and now we're looking to rotate maybe higher, maybe fill this sell-off in. As far as selling from this level, I probably couldn't sign off on that. And the reason why is you just sort of in no man's land. Really crazy day yesterday. Solid start to the trading week. Brutal dump. I mean, absolutely brutal dump last Friday as the semiconductors absolutely crashed. If you wanted to sell, daily 38%, I guess we could build a case to sell up there right around 29,000, 29,166. But from here, I don't know that we sell. I really don't know that we sell. Now, the other thing you got to remember here, Cook, is SpaceX IPO Friday. We're going to have IPO live for you, SpaceX live for you. But what we have developing here is a situation where the NASDAQ it's almost, I would say, foreshadowing this SpaceX IPO. And we talked about the concept of maybe people are selling things so they can get in and buy SpaceX. And by people, I mean not people like me and you, but I mean funds. I mean hedge funds, big hedge funds, small hedge funds, investment banks, players, institutional players. The institutional players have an appetite for SpaceX. And we'll break this down for you more tomorrow when I preview the IPO. But is the SpaceX IPO on Friday actually becoming a market driver for the entire NASDAQ 100? I can make that argument. I really can make that argument. I can say, well, there's some divestiture here. Now they're going to say, well, that's because of the chip sell-off, the sell-off in semiconductors. And I said, listen, for whatever reason, semiconductors got sold off on Friday, lost 10%, that sector of the NASDAQ. That's fine. Why did they get sold off? Is AI going anywhere? No. Is the need for chips going anywhere? No. Are players like NVIDIA going anywhere? No. What's different? Well, you've got maybe an opportunity to make generational wealth on the SpaceX IPO, and a lot of people believe that. Now, personally, I think the people that are going to become incredibly wealthy are the folks that are in SpaceX that have taken stock options over the past several years and have an opportunity really to truly walk away millionaires on Friday. And we're going to see that. That'll be the story. It'll be not unlike Meta, Facebook's IPO, or Microsoft was another big IPO where it was the number, I think it was the greatest number of millionaire secretaries in the world, I believe, was created by Microsoft because they took stock options instead of taking Christmas bonuses. These are the stories we're going to hear Friday. All of that creates FOMO, fear of missing out. So my question to you, if you're a Cook, my question to you if you follow the NASDAQ, is if you were in the NASDAQ as an investor and just made a stack on the ride to 30,000, let's say you walked out of that, let's say you walked in there with $250,000 and you walked out with maybe $500,000. You say, okay, that's pretty good money. What should I do with my $250,000 profit here? What if I bought $250,000 in SpaceX and this thing turned into the next Berkshire Hathaway with a potential merger with Tesla and maybe got into the financial industry, which most of these companies do in some capacity? Then what? What if the plan was to take that 250 you made in the NASDAQ, roll it into something like a SpaceX, or maybe roll 100 of it into SpaceX, thinking that if this thing really goes in 10 years, I can actually retire in this world? Believe it or not, there are people out there thinking it and they're doing it. They're liquidating here to put here. And that's really what I see happening in the NASDAQ. A lot of folks will argue with me, call me stupid, and that's fine. I don't mind being called stupid. Really don't. Stupid like a fox. That's the way I look at it. But this stuff right here, fascinating chart. It really is. If you want to sell, though, wait. You'll get a better selling location than 28, 8.25. You'll get better than that. You'll get 29 if you stick in there, more than likely. And coming off this CPI number, it's not a good number. It's really not a good number. Let me see. Plakey, how often do you do live sessions on YouTube? Yeah, we're live daily. I go live every day. The times are a little bit, this week they're going to be a little bit different. Typically I go at 1 p.m. Eastern time, which is sort of the mid-session brief. But this week we're going early to cover CPI. We covered non-farm payrolls last week live, and we're going to have the SpaceX IPO at about this time on Friday. I'm going to lay it all out for you, and we're going to talk about what it can be and what it can't be. So that ought to be good. Let me see Packham. Gold ranging now. Good to see you, Packham. Welcome. Yeah, gold's not doing anything. I mean, there's your gold market right there. What do we do with that? We have to wait. I have to wait for this thing to break, because it really is that type of thing right there. Ugly. I mean, it's ugly. That's for sure. Let me see. Isaiah. Good to see Isaiah. New name. What is your gold sell position specifically, sir? 4170. Now, the gold sell needs to be right up here. I've got that 13-month EMA. Let's just go back and double check it, because I sort of threw that one down really fast. Our 13-month EMA is right around 41.8594, so we're spot on there. Let's take this back down to the 1 minute and sort of dial this entry in. My sell, 41.82, that's pretty good. You go 83, you go somewhere right in here, 83.50, 82, whatever you want to do. Somewhere right up there around that moving average, though. If we get a retest of that today, we have a really good chance to scalp that thing for at least $5 to $7, given this volatility. But right now, gold's coming off. Unfortunate. We wanted it right there. We didn't get it. We absolutely 100% didn't get it. That's for sure. Absolutely. 11 p.m. here, but not too late to tune in Friday. Okay, Plakey. Well, I sure appreciate you joining me. That is late, though. I'd probably already be in bed by a couple hours. All right, guys, let's go ahead and take a look at this will be our MT5 platform, brought to you by Switch Markets, powered by Switch Markets. Really, there's you can trade darn near anything on this platform. I've been exploring it a lot lately, and the CFD, the stock CFDs, the index CFDs, you could trade really anything. So we're looking at WTI crude oil, had a nice real sell signal. This is our 9 EMA strategy. This is a basic look at how to trade price action, and we have a custom EA. We've got a full strategy kit that you can download for free over at Switch Markets. Just go over, type Switch Markets 9 EMA into your browser, and you can go ahead and find it over at the Switch Markets homepage. It's one of the free resources and free EAs. The EA right there itself gives you a big carrot, a big purple carrot when you're supposed to sell, in a gold one when you're supposed to buy. And just by looking at these charts, that is a beautiful trade right there in WTI crude oil. But this one right here for gold, this is really what we're looking at. So let's go ahead and expand sort of our scope here and look at this gold market. So 1 minute gold, nice bid there. Might have got stopped out. More than likely would have got chopped out of this market. But we didn't really get an opportunity to trade this to the short. And the reason why is that we're ranging. Let's go to a 5 minute. Okay, so here's a 5 minute chart. Now this gives us a good look at what's happening, in this market. We got the buy signal. What is the buy signal? A couple of things have to happen. We have to trade beneath 30 on the RSI. That sort of qualifies it. That tells us, okay, we're looking for a trade. If we trade back up over that that 9 EMA within 7 bars, we get a nice buy. So this area right here is we executed a similar trade yesterday. You'll notice that the bid would have been right up there. You can see the price is sort of coming down. Can I buy right now? I'd say, yeah, you can buy it. This would still be valid. The real question is where do you get out at? You could get out right there beneath the signal bar, or you could get out beneath this swing low, whatever you really want to do. Let's go ahead and put the stop loss beneath the swing low market structure and try to design this trade accordingly. So something like this. Okay, now that's just one lot of gold. And you can see the amount of leverage that we just applied. I mean, that thing, as it ticks, we're looking at 245, 250, 130. I mean, that's just an absolute circus act. You can see that this P&L can either be very good or very bad. And that's because we put a full lot of gold on there. You're probably not going to be trading that kind of size. Remember, these are demo dollars. But if you do have the capital, maybe you're trading a prop firm challenge, something like that, then you maybe could execute a trade like this. So right here, the idea is very simple. We were in oversold territory beneath 30 on the RSI. Then we qualified the trade by getting priced to cross over and close above our 9 EMA. All right, 5-minute chart. I like the 5-minute chart. I like it better than a 1-minute chart. And you can see we sort of went sideways. So your entry point, theoretically, if you were trading this as it happened in real time, you could have traded and bought right there on the close. Or you could have waited maybe for price to retrace back down to maybe 50% of this bar, 60% of this bar. We executed a similar trade yesterday. It worked out very well, and this one's starting to work very well for us. As far as right now, who knows what's going to happen? But you can see gold starting to rally a little bit. So you can see we're up about $700 or $800. A lot of leverage, a full lot of XAU USD. I mean, that is a significant trade. You need a little bit of money to make that trade. So this is sort of an idea that I'm kicking around, maybe adjusting our entry points on this 9 EMA just to improve maybe our scalping entries. But something like that is definitely blown up to the top side. You can see we're up just a little bit there. The longer it sits, the more you're exposed to systemic risk. You guys know that. Gold's sort of having a down day today. Are we ever going to get established and maybe get a rally back up to maybe 41.75, maybe 41.70? I think it's very possible. I really do. Sort of like our 920 EMA crossover trade. This trade gives us an opportunity potentially to get out of the market when we know we need to. Something like this. Stop loss there. Profit target. I designed these with at least a 1-to-1. If you wanted to shoot for more than that, you could. If you wanted just to take the money right now, you could. I mean, it really is up to you. It's all about how you want to execute these trades. Remember, imagination is your greatest asset as a trader. No question about it. If you could look at a strategy like this and say, Shane, that sucks. Here's how I can make it better. Do it. Absolutely do it. There's a million ways to trade something like this. I mean, there really is. You can wait. You could go immediately. You can wait for pullbacks. You can do all sorts of things. You can incorporate MACDs, ATRs, whatever you want to do. Parabolic curves. I don't know if that'll work, but maybe a parabolic curve will work. You could use trend lines with your 9 EMA. You can do anything you want. Creativity is your number one asset, but that is exactly how you would execute a trade, waiting for maybe a better entry or a pullback off of entry using these short time frames on the 9 EMA. That can be very good. So we'll go ahead and let that simmer. We've given back all of our gains. I mean, honestly, fighting a stiff trend like that can be extremely problematic. You can see where life was pretty good back here, and now gold's sort of coming off just a little bit. Great Britain Pound USD. Interesting. We're coming back to this one. 5-minute chart. I thought we had a buy going on this. Yep, there's your buy. And we sort of come way off now. So a lot of action there. Let's go back to our Euro USD and see if we did anything when we got out, or did we just get clipped and then a reversal. Look at that. That's tough, isn't it? That ran us. 6:30 a.m. right there, my time. 6:30 a.m., 8:30 a.m. Eastern. What is that? That's your CPI bar. What happened? Ran our stops, right? Ran everybody that was holding shorts out of the market and then came back down. And does it continue from here to the top side? Potentially. Very choppy, very ugly. No two ways about it. Very ugly. Very ugly strategy. Okay, we got a trade idea that I did want to put out there, though, so let's go ahead and take a look at it. This is one that went live. It didn't go live, but it did. I put it out last night. We put these out in the How to Trade trading room, also on my X account, ShaneV_trader, and you can catch me there. But essentially what this trade idea was a buy. It's a buy signal for the US 30, and our level down there is about 51.25. That's absolutely key. And the reason why we wanted to take this trade was because of the war. The war was kicking off again. We saw the helicopter in the Strait of Hormuz was downed yesterday, sort of late in the session. The U.S. has retaliated, and now Iran's retaliating. So it really does look like the war is back on. Our bid was very simple, 62% of this nice big wave. It's not a daily wave. It's more of a weekly wave, but you can see from that low to that high, 62%, right around 50,093, maybe 51 and a quarter would be a pretty good entry to the top side, and we're looking for about 250 pips on that. So I'm watching this US 30 closely. If we get a chance to bid it, that would be great. You'll notice that we were right down in that neighborhood, and then we got a significant bounce. 25 minutes until the U.S. Open. I'm not convinced that this strength that we've seen in the last, half hour or so is going to hold. I'm really not. You can see that sort of there's your rally, your CPI rally. I don't think it holds. I think we're going to trade down from here. If I had to guess right now, I would probably be looking to the short side of the US 30, that's for sure. Let me see, Sarter. Good to see you, Sarter. Welcome. Let me see, Packham. Degenning into gold sells. You're going to sell gold? I love gold. 41.52, 41.53. Interesting. It's an interesting market. Isaiah, thanks for the clarification on gold, sir. Ain't new here, though. Been following for over 6 years now, almost every live session. Really? That's fantastic. I didn't recognize the name, Isaiah. I want to say thank you. Thank you for tuning into the live sessions. If you ever need anything, be sure to reach out. You can catch me on over to How to Trade. If you have any questions or if you just want to say hi, fantastic stuff. 6 years. Wow. 6 years. So I've been doing these for, 4.5 or 5? So you were here before I was. That's great, man. That's fantastic. It's absolutely fantastic. Good to hear. If you're still here for 6 years, that means that the trading's going pretty well. Probably ups and downs. Probably a long period of time where you've been able to hang around the markets and stay in. That's great. That's great. That's what it's all about. It's being in it for the long haul. And I know that's something everybody talks about, but if you've been here 6 years, you have been in it for the long haul, and I respect that. So fantastic work. The markets are interesting. They're always interesting. And over the last 5 years, the markets have shifted fundamentally. I mean, the dynamic is completely different than what it was when I started just doing these live streams. And when I look back to 2011, 2010, and 11, the markets are completely different from what they were back then. The game's still the same: buy low, sell high, buy low. But the mechanism and the way that we do business, even though my strategy is very similar to what it was back then, the entire thing is just a lot. It's just a lot different. It's faster now, a lot faster. All right, let's take a look at our news. Here we go. Pull the string, right? There it is. Trump says Iran will pay the price and claims they have taken too long to agree to a deal. And there you go. Oil prices jump after Trump says Iran will pay the price for failing a peace deal. Consumer prices rose 4.2% annually in May, the highest in 3 years. This is an absolute disaster financially. I'm just going to go on record as saying that. If you're going to kick this war off again and it goes into the summer months, crude oil is going right back over 100, no question. Consumer prices rose 4.2% annually, the highest in 3 years. And that right there, there's your year-over-year change. Really coming out of COVID here, 9% in 2022. And then you come right down, and life was looking pretty good down here. It really was. April last year, and then July, and you see really there's the break. In January, you're at 2.4%, just above the Fed's 2% target. And now, I mean, that's what a war will do. That's what a war will do. Okay, CNBC, I'm not vouching for them as a news source. They are just free. That's why we're referencing this. It's free, and everybody has access to it. But believe me, I do not shill for CNBC. I'm actually highly critical of pretty much everything they say. There's always an underlying political tone with what they write, but they are reporting the hard numbers here, so let's have a look. However, stripping out the volatile food and energy prices, the so-called core CPI accelerated 0.2% for the month and 2.9% from a year ago. The so-called core CPI. See how they're always kind of snarky when they write anything? I mean, why say so-called? It's called the core CPI. The Fed calls it core CPI. It's core CPI. All right, whatever. Accelerated 0.2% for the month and 2.9% from a year ago. While the annual rate was in line with the forecast, the monthly gain was below the 0.3% estimate and less than the 0.4% April increase. So there you go. Absolutely. And then they start talking about Warsh. Let me see. Next week, we're going to have the decision, the next Fed decision. That's going to be fascinating stuff. I do want to cover this one last concept before we sort of sign off here. Okay, I was asked earlier to put these numbers into context. This is a chart for the raw CPI data. So there's basically how they calculate the growth is they have a raw index, and they subtract this month from last month, and then they do the division, and they add all the stuff in there to make it a decimal. They decimalize it. So that gives us a really clean growth model. Everybody focuses on growth. Typically, the markets focus on growth. And you can see right here, these projections, they're all growth projections. 0.5%, 0.6%, and the idea is to stay as current as we possibly can. I don't do that. I reference the CPI index, the raw index. 335 compared to 333. Now, essentially what that means is that the raw index and all the inputs are rising. And by their nature, they're going to rise to some degree. That's the way fiat currency works. That's the way prices work. When you have fiat currency that isn't based on anything but our confidence, that's it. This stuff right here, I mean, I'm not kidding you. I hate to say it. It's not worth anything. The only thing that makes this worth something is the U.S. government backs it and people accept it for exchange for goods and services. That's it. And I know you guys have heard that a million times, but it's the honest to God truth. This is not backed by gold. It's not backed by anything. It's backed by blood, sweat, and tears, people's work, people's effort, wars, but it's not backed really by any hard asset. I can't take it down to the bank and change it for gold or silver or copper or anything. All right? I can buy that stuff, but I can't directly exchange it. Now, when we look at the raw CPI index, it's always going to rise a little bit, typically. It'll come down sometimes, but very rarely. And the idea is that over time, these things lose their value. So it takes more of them to buy, what you bought yesterday for $1, takes $2 to buy it, next year or 2 years from now. That's the nature of fiat currency. You're always expanding. That's where a lot of the growth in our economy comes from, the growth in prices, the idea of preserving your capital away from inflation. Where we run into trouble is where real inflation outpaces sort of your earning power. So what I'm sort of a roundabout way of saying, and it's a difficult concept, and fiat currency in itself is manipulated in so many different ways. A lot of people really don't understand what it is and how it works. I have a basic understanding of it. I know that over time, money loses its value. That's the way it's designed. It's designed to lose its value over time. So when we look at CPI and inflation, inflation's typically always going to grow. And that's viewed as being a healthy thing. As long as your real earnings or your wages outpace inflation, then the inflation doesn't really hurt you. That's the concept behind fiat currency. Now, unfortunately, a lot of folks, that's not the case. Their earnings aren't growing. Your wages aren't growing. It's not outpacing inflation, and that's when you run into a real problem economically. All of a sudden, the prices are too high to buy anything. That's what we're facing right now, and it's been this way since COVID. So I look at the CPI index. I'm not really concerned too much about the growth month over month. I'm looking at the CPI index to tell me exactly where we've been historically. Now, I've shown this chart a lot. If you're new to live streams, this was life before COVID. Notice not necessarily that the index is much lower, because just over a function of 6 years, 7 years, 10 years, whatever, it's going to be lower. That raw index is going to be lower naturally. That's the way this index works. But what I want everybody to see is that the gains of that raw CPI index are nowhere near, and I mean nowhere near as steep as what happened after COVID. Why? They doubled the money supply literally overnight. Unlimited quantitative easing put so many more of these into the system that they lost their value almost instantly. Now, you still have some value there, and we can argue what a dollar's worth, but what I will say is take a look at this. This steep inflation that we saw really kicking off about 2021, this is when the world really started to panic. The financial world did, and they started raising interest rates. This steep trajectory right here. Since then, things slowed down. They started raising interest rates a little bit off of that 0% pivot that supposedly got us through COVID, and it flattened out right there. Flattened out right there. Thought we were out of it. Thought we were out of the woods. And then it took off again. Came back down a little bit right here. Flatlined right here. What happened right here in late 2024? Right before the election of 2024. The Fed came in with a 0.5 point rate cut. Completely unwarranted, completely unjustified. They did it anyways. What happened now? Took off again. Right here, government shut down, stopped reporting it. It looked so bad they stopped reporting it. Flatlined a little bit. Okay, we're back. And then there's your war. And your war kicks off and inflation goes higher. Guys, this is the kiss of death right here. This 6-year period is the kiss of death for your purchasing power. I watched a great YouTube short the other day, and it was a young lady on there that was, she was very, hang on a second. All right. Sorry, I had a little technical issue there. She was talking about being a millennial and why the purchasing power wasn't what it was. And essentially, the idea was, as a millennial, okay, young kids saw 9/11 on 2001. That was a major shock. Then you went into a war for about 15 years in Afghanistan and Iraq. And then you saw a major catastrophe in 2008 to 12. I lived through that. And then you started to get back on solid ground. And then you got into COVID. And now the home prices are 300% of what wage earners' wage growth is. My point is this. The COVID-19 pandemic increased the money to supply to such a degree that all that recovery that was coming out of 2012, all of that basic wealth that was being restored after a major wipeout in 2008 to 12, that purchasing power and that wealth got degraded in a big way. Essentially, the billionaires became bigger billionaires. The rich got richer. They were able to stockpile a lot of assets during COVID because a lot of people were broke out. People lost businesses. People lost everything. So we're in a very precarious financial position. And the reason why I talk about any of this is because it all really does come back down to purchasing power and inflation. It comes back down to, what exactly is your dollar worth? Well, this thing's broken. Sorry, we have technical issues at a mile high, a mile above sea level. So there's your DXY. The real question is, what's this thing worth? Okay, took a major dump, realistically took a major hit when Trump got inaugurated. We were expecting lower interest rates, economic growth, all that jazz, right? Essentially, we were trying to inflate our way out of a real debt problem that the United States has. That's a different conversation for another time, but this dollar sort of went down, and now the dollar's gaining puff, dollar's gaining strength, yet your inflation is high. So is this stronger dollar, let's say relatively stronger dollar compared to where we were just before the war, is this stronger dollar a function of actually restoring value to the USD and consumers, or is it a function of investiture? It's hard to say. It's probably a function of the T-bills in the debt market, more than likely. But you can see what happened here. Huge rally in the DXY. Now up here, you really didn't want to see it that high because your stocks and everything sort of devalued, right? I mean, what was gold worth back in September of 2022? What, a quarter of what it was now? Half? Take it all the way back, July 2014. Take a look at this. Back in the catastrophe, this was right after 9/11. Dollar lost a ton of value. Why? Because they pumped the market full of cheap capital. That led to the housing bubble of 2007 and 8. And then right in here was a major catastrophe, 08 through 2013, 2012, 2013. So this right here is a great example of what happens when we have a major catastrophe. That's 9/11 right there. Boom, 2002. Happened right in here, 2001, bang. Pump the markets full of money. Okay, that's great. What happens right in here? 2016, 2017, life's pretty good. Dollar's relatively strong. Economy's growing. Then what? March of 2020, pump the system full of money. Dollar loses a bunch of value. Then it gains a bunch of value. And now what's it doing? It's losing value again and sort of stabilizing. What I'm saying is it's all predicated on inflation and the strength of the dollar. That's what all these prices, all this stuff that's denominated in dollars, it really is all a function of how strong the dollar is. So just because you see, the US 500 going, oh man, we're at all-time highs, life is good. Well, is it really that good when you can't buy a steak at the store? This is the major disconnect that we're having economically here in the United States, and we're seeing it globally. Just got back from Amsterdam. I saw the prices there. I couldn't believe them. Couldn't believe them. Staggering prices. So something to think about there if you're interested in inflation and fiat currency and all this stuff. It's absolutely brutal. This is a brutal period. I mean, if you're a millennial, if you were born, maybe in the 90s, it's tough. I mean, getting your feet on solid ground in this world financially, man, it's tough. And COVID-19, I mean, it was about so much more than a pandemic. It was financially, it was a financial Armageddon. It really was. And we're just now seeing this stuff become very evident. That's for sure. All right, let me see a couple questions here, and then I'm going to go ahead and sign off. We've been going for about an hour. Abiel, let me see. Is this good for a hold, or should I sell all quantum and AI stocks? I lost 32% negative yesterday, or already. Quantum and AI stocks. I mean, geez. Number one, I'm really not an investor. I'm not an investor. I couldn't really tell you whether you should hold or not. What I will say, and we might as well just pull it up, I mean, NASDAQ 100. Still bullish. Still bullish. If you're asking me if the AI bubble's popped, no, not yet. Not yet. I think you're seeing divestiture ahead of SpaceX. So if you were down 32%, I would definitely be watching. I mean, if we have a couple more big down days, then you're going to have to start maybe thinking about restructuring your portfolio. But the NAS 100, the index itself, is still up above 27.7, something like that. There's no reason to jump yet. If you're a long-term investor, it's no reason to jump just yet. This has me worried. 30,000. It's setting up to be some serious topside resistance. You'll see the two-way trade that's developed the last 2 months. 30,000. Just because we blew it out of the water doesn't mean you don't retrace and potentially see an intermediate-term top. Everybody knows where that top is now. You're going to probably see more shorts come into the market in July, especially if this thing in the Persian Gulf keeps going. That's what I would say. So do you hold or do you sell? Yeah, that's your call. That's a really hard decision. I wouldn't tell you what to do there. I would just tell you that the NASDAQ 100 technically is still in an uptrend. That's for sure. Let me see River Lake. Good to see you, River. Welcome. Been a while. Let's see, River. It's just transitory. Inflation. It's just transitory. Now that brings back memories. That's good stuff. Oh my gosh, I remember that. It's just transitory. That inflation's entrenched. Think of World War I. Think of the trench warfare in World War I. That is entrenched inflation. That ain't going nowhere. We'll go a little bit here, a little bit there. It isn't going anywhere. I'm absolutely shocked. I will be on pins and needles to see how Kevin Warsh handles this mess. If he cuts interest rates, inflation will go to the next level. It'll go to the next level. Let me see. Absolutely, Plaky, you're welcome. All right, guys, I'm going to go ahead and sign off. I know most of you tune in just for the first few things, but we ran long today, but that's all right. Nothing wrong with that. I do want to thank you for joining me today. Be sure to tune in for another live stream at your leisure. All of our newer content's over at Switch Markets on YouTube. We're putting out a lot of shorts and things and a few videos here and there. Our live streams, though, we're going live every day. Tomorrow we'll be back. It's going to be a little bit later, though, 1 p.m. Eastern time. And then Friday we're going to have the SpaceX IPO, which I think is going to be which I think is going to be fun. They're not going to tell us when they start actually trading the IPO, whether it's going to be in the pre-market or during the market. Nobody's saying anything. So I'm going to go on during the pre-market, and then we may sign off before they even start trading it, but we'll give you the quick and dirty of all the expectations and what we think is going to happen. We'll also do an around the horn on the news and the markets. Iran war kicked off again today. We all expected it. I've been saying that for the last probably 2 weeks. We'll see if it's short-lived, though. We'll see if this is short-lived. I don't know. Tired of talking about it. I don't know. All right, everybody. That's a wrap. I'm going to go ahead and sign off. You guys have a fantastic session. You're welcome, Tuku. Thanks for joining me over in the How to Trade community. If you need anything at all, head on over to howtotrade.com. Sign up for your free account. Send me a private message. I will get back to you. I promise I'll get back to everybody. Other than that, same as always, guys. Keep an eye on that U.S. Open. I have a feeling this is going blood red for U.S. equities today. We'll wait and see. The futures are definitely down, but they're not down as much as they were. Watching that level in the U.S. 30 potentially. U.S. oil, not really spiking. It's not spiking too much, only about 89.36. We're going through rollover in U.S. oil. I didn't even talk about that, but rollover is on the horizon. So, right now, August crude oil is trading at about 87.75. That's beneath your July crude, which is about 89.40. As soon as we roll over, crude oil may sell off a little bit. If this thing kicks off, we're going back to 100, though. No question about it. All right, everybody, that's a wrap. Have a fantastic trading session. As always, trade the action well, and we'll talk soon. See you. Traders all over the world are already using Switch Markets. Thousands of traders just like you across multiple markets each and every day. If you haven't joined yet, you can open an account and begin trading in just a few minutes. Click the link in the description.
What am I doing? I told myself this year was going to be different. So many things I want to achieve, yet I'm here wasting my time doom scrolling. I was going to start running again. I was going to make more of an effort with my friends. I was going to work on my confidence. I was going to get fit again. I was going to start trading. Time to wake up and stop making excuses. Okay, Switch Markets, let's do this. When you're ready to trade, Switch Markets is waiting for you.
By the way, you're not trading alone. There's a whole community of traders tuning in daily, sharing ideas, watching the markets together right here on the Switch Markets YouTube channel.